Going on, everybody? Welcome back. We're going to give everybody 2 minutes to join in here real quick. I have my sunglasses on because the future for GameStop is so bright, it's blinding the hell out of me. Join in, ladies and gentlemen. We're going to talk Wu-Tang, GME, Dividend, and what this could possibly mean for the shorts. And this is a little bit of tinfoil hat, but this is a lot of actual concrete evidence as well. So we're going to touch on that here in a moment.
Squad.
Gonna be so goddamn rich.
I think it's time to blow this thing. Get everybody in the stuff together. Okay, 3, 2, 1, let's go.
Gonna be fucking rich. I want my fucking money. Griffin, I want my fucking money. Yo, motherfucker. Holy shit, we're gonna be so fucking rich. Damn it, we're gonna be so fucking rich. Griffin, I want my fucking money.
You're an original,
Hey,
aren't
yelling,
you?
give me the fucking money. Time to get a little wild, ladies and gentlemen. Got my thinking cap on. And my sunglasses. Get the goddamn money out. Really hard on the eyes.
Great. Bounty cutter.
We're gonna be so fucking rich. Get the goddamn money printer out. All right, that's about enough of that. Thanks for joining me, ladies and gentlemen. Here's what we got. Today we're going to be talking about specifically meme stocks at this moment. And as I said before, I'm not going to call them meme stocks anymore because both GameStop and AMC are incredibly high value growth stocks. Now, GameStop, to be specific, is on the verge of issuing something that's never been done before. I believe that there is a Wu-Tang NFT dividend coming to all GameStop holders. Hear me out. Hear me out. This is what's going on. So, some of you people may know this guy right here. That's Ryan Cohen. And you may be able to recognize that hoodie in the background as well. And up here, you've got the team from Pleaser Dow when they purchased the Wu-Tang album for, I believe it was around $4 million. And there was mysteriously a guy in the background wearing that exact same hoodie with his back turned, hood up, same exact seams behind the shoulder blades as well. This is a lot more than just speculation and a lot more than just pictures of hoodies. I promise you that. This album, before I get deeper, is going to be played in Tasmania, Australia. This album was purchased originally by Martin Shkreli, and then it was taken from him by the United States Department of Justice. And then it was purchased by Pleaser DAO, D-A-O. And they said they would make it more widely available after buying it from the U.S. government. Interestingly enough, something about Tasmania a lot of people don't know, that actually the one and only black swan is native to Tasmania, Australia. Yeah, Varen, this is the one that Shkreli owned. That's right. Martin Shkreli. This has nothing to do with him, though. Excuse me, didn't want to cough in your ear. So allergies drive me nuts today. I'll get to this photo here momentarily. But basically, right now, if you go to listen to this album, you get put on a 79-year wait list. But people that become verified holders of GameStop through Pleaser DAO using Plaid, P-L-A-I-D, which some of you may be familiar with. Instead of saying you can listen to this in 79 years, it says you are on the list for real now. Now, this is a lot more than just speculation, and I'll get to this. If you look at the distribution code as a developer for this as well, within the code at the bottom, this has been analyzed with specific artificial intelligence by engineers as well. And you could see that GameStop is referenced in a multitude of fashions, and it uses Plaid to verify and connect with your brokerage to see if you actually own shares of GameStop. If you are a verified holder, you then become placed on the list for real now. If you are not a holder, it says we will text you in somewhere around 79 years. Goodbye. So if you have 0 GameStop ordinary shares Class A, GME found, if you have more than 0 shares, I should say, you are on the list. If you have 0 or none, then it says we'll text you in 79 years. Goodbye. Now you can see here, I'd like to run this information by you guys because Stay Positive here is in engineering and has been a lead tech for over 10 years. And I can verify, as I spent several years in IT as well, that what he's saying makes perfect sense. So he says this has been mixed with ChatGPT and SuperMaven to dissect the code, as it would be difficult otherwise, and includes human readable summary of the React / Next.js code. React is a fantastic software as well, basically for coding, not necessarily a software. But it's a stack, part of a stack. I extracted out the JavaScript file from the developer tools panel, and he went a step further. He said, essentially, the React / Next.js code is connecting to Open Banking Plaid API. If you don't know what that means, it's a website that verifies your bank account or your brokerage account with various firms, specifically using the Plaid API to manage and verify GME stock holdings. Please note that GME shares have been listed as Class A shares specifically, and the code is designed to handle this. When reading this, I wondered if in the future there will be different classes of GameStop shares, kind of like Berkshire Hathaway. Below is an explanation of what the code is doing, etc., and also screenshots. So basically, if you're familiar with JS but not React, you can use React hooks such as the useState keyword to manage the state of the application. And then the Plaid API is used to exchange the public token for an access token. And then it can retrieve the user's securities from the brokerage through this secure connection through Plaid. So The GME specific logic checks if the user holds GME stocks and updates the state accordingly. You can see here it verifies everything with the API. I won't get into the exact nitty-gritty of this. Reading out the code to you guys. You guys can click the link to this Reddit thread, which I'll put in the comments as well after this. So there is verification here that there seems to be a transaction occurring for GameStop Class A shareholders using the Plaid Open Banking API. Now, this guy speculates that people will be receiving a Wu-Tang dividend very soon for being a Class A shareholder. Now, I do have to agree that looking into this in depth, this could very well be ownership of the deed. Maybe not necessarily the album. Obviously, it's a one single album, but NFTs could be created of the actual deed of ownership of this dividend, and it can be given out to the verified shareholders. Here, theoretically, this guy explains, first, 350 million access tokens can be created, one for each share that should exist. Then 75 million will be given to Computershare for the DRS apes, as what happened with the split dividend that was improperly processed by the DTC in the past. And this is where this comes in differently from the split dividend. So the remaining 275,000 codes will be given to the DTC to distribute to the brokers, and the brokerage would then distribute them to the shareholders. So therefore, the DTC would not be able to break each of these NFTs up into little pieces. They would not be able to manipulate the way that it's distributed, and they would only have 275,000 codes to hand out. 275 million, excuse me. Now, GME shareholders would be receiving one code or one NFT per share that they have, for example. And if there are a bunch of people that are not receiving their NFT dividend or their Wu-Tang dividend from their brokerages, there's going to be hell to pay. In addition, because they can't spoof these codes, they can't break them up into little pieces. If they give one that's not an actual password to get in, people won't be able to get into listen to the album, and they need to be one of the 350 million codes that Pleaser DAO has created. So this will be something that for every Class A share of GameStop that you own, you can get one of these dividends, digital NFT dividend that cannot be copied, because each one will have its own basically serial number, if you will. In theory, this is going to be released, and here's more information from Pleaser DAO. Pleaser DAO posted this today. Obviously, 741. And if you've been following GameStop for a while, you know that Ryan Cohen has, in the past, tweeted 741. This is the exact same thing we're seeing here from Pleaser DAO. I put all this here in this Twitter thread and more. I also previously speculated that the whale buying the $20 GameStop calls was highly likely to be a market maker who was using them to hedge covered calls with these calls in order to marry them together. Okay. And this is, in fact, highly, highly plausible, as this is something that's very common. Okay. And I went ahead and I thought about it further. And I thought to myself, why the hell would a market maker buy blocks of 5,000 exactly? They would never do that. A market maker would never buy blocks of exactly 5,000 $20 call contracts every 15 minutes. They would buy exactly the number as needed, likely through a high-frequency trading algorithm. And they definitely wouldn't do it in a way where people would see that it's a flat, even number. I did run this by ChatGPT in the past, ChatGPT 4, and I asked, would buying $20 call contracts on GameStop in order to marry them with covered calls sold by others be a good hedge for market makers if the stock price is around $24 a share? And of course, I got the answer that I was expecting. And it's absolutely, it's a great strategy. It's complex. It could be very profitable. There's a significant arbitrage there. It prevents them from having to buy shares in order, and instead they could buy the long calls. And if they have to exercise them, then they will be taking those shares from other shareholders, and they absolutely need them if they need to cover shorts positions. So as you can see here, holding $20 calls allows the market maker to hedge against short positions or other obligations they may have. If the stock prices rise significantly, the market maker can exercise the calls and buy the stock at $20, reducing potential losses from short positions. There's arbitrage opportunities, premium collection opportunities. There's a lot of volatility there, but that would also work out in their favor. Liquidity concerns, execution risks, and so on. That I came to the conclusion that it makes perfect sense for the market maker to be doing this, but why would they be buying exactly blocks of 5,000? They wouldn't do that. They wouldn't do that. No market maker is going to buy an exact even number of call contracts repeatedly for multiple days in a row, even if they need them. You know, they might buy 5,317 one moment and then 4,704 the next moment, and whatever. You get the idea. They're never going to buy exactly 5,000 in 15-minute increments or in 5-minute increments. Crushner, this is not the whatever Richard Newton claimed as the unified gaming theory, whatever kind of. I saw that shit. That shit's full of so many holes. It's absolutely fucking ridiculous. This is specifically regarding the whale that is buying these call contracts, and I've come to the conclusion that due to everything going on here with the Wu-Tang album going to Tasmania, Australia, and it will be on display in Tasmania for about a week. And that is the exact week that the $20 call contracts will be in the money. GameStop has a shareholders meeting on June 13th as well. Ryan Cohen has been seen in multiple instances in this exact same hoodie, and who else at PleaserDAO would actually hide their identity? Nobody. We have the code within the actual website shown here, proving that there's an API linkage within the actual programming for GameStop wallet verification of shareholder Class A shares of GME. And I personally found this so bullish that I went out and spent several $1,000s on GameStop call contracts today alone. I also bought AMC because, as many of you may know, they are in a basket of stocks that more often than not, when they both start to go volatile, they do it together, regardless of which stock is actually the underlying issue in that particular moment. Don't be a degenerate and do what I did. Go out and do your own homework. Yeah, unsettled purpose is right. Richard Newton's speculation was that the whale was UBS covering due to Credit Suisse and Archegos crap. And here's the thing is, there's about 1,000 different holes in that, you know, from the fact that, you know, they're taking information from 4chan, which is just supposedly some guy that was talking about working for UBS, whatever. And then another that UBS was buying blocks of 5,000. UBS wouldn't do that either. UBS would not buy exact blocks of 5,000 shares in 15-minute increments. This is not Roaring Kitty, but this is somebody, in my opinion, who wants these call contracts. And that is GameStop. I don't have verification of this, but we all know that GameStop just raised another $1 billion, $933 million more from their 45 million share issuance just about a week and a half ago. The only person that was buying these call contracts, in my opinion, is this guy, because he has the explicit right from the board of directors and the shareholders of GameStop to spend those $2 billion that GameStop has in any sort of fashion for investing, mergers and acquisitions and such. And instead of doing share buybacks, I think that buying $20 call contracts in 15-minute increments is a great idea, in 5,000 call blocks. Who else was doing things in 15-minute increments? Think about it. Wasn't Roaring Kitty tweeting every 15 minutes? Anybody? Ryan Cohen has the ability to spend $2 billion worth. $2 billion worth of GameStop's funds to make more money for this company. He's obviously been seen here. They've been working on this for years. The code is within the program. In Tasmania's native bird is the black swan. And this exhibition will take place in Tasmania, Australia. The GME shareholders meeting will be on June 13th, I believe. GME shareholder. It's not really it is a fucking shit stockholder meeting, shareholder meeting. Here's the schedule, 14A. Proxy statement. Or not. Does it want to load? Come on. And this, as you can see here, the 2024 proxy statement shows that on June 13th, 2024, 1 week before the June 21st call contracts expire, GameStop is holding their meeting. This album here, Through Pleaser Dow, is going to be on display from June 15th through June 24th in Tasmania, Australia. They cannot sell the album, but there is absolutely nothing within the contract that prevents them from breaking up the deed of ownership into millions of little pieces and issuing them as an NFT dividend to be listened to and owned in order to create a verified share count of GameStop shareholders. There's nothing that stops that. So because of that, I acted in a little bit of a degenerate fashion and spent a few $1,000s to buy more GameStop call contracts, as I told you guys. So June 11th, what are you guys posting about? What am I missing here? GME first quarter fiscal is June 11th. Yes, there's GameStop. Yes, there's two different things happening. That the stockholder meeting is on the 13th, and there's another thing happening on June 11th. Let's break that down here. GME has announced the first quarter fiscal results. Thank you, guys. Thank you very much. So the first quarter fiscal results for GameStop will be announced on June 11th after the market close. The stockholder meeting is going to be June 13th. The album will be available on June 15th, on display in Tasmania from the 15th through the 24th. Somebody has been buying in 15-minute increments. That means exactly 15 minutes apart, not 14 minutes, not 60 minutes, but multiple days in a row for basically like a week straight in 15-minute increments, exactly 5,000 call contracts on the $20 strike for AMC. I'm sorry, for GameStop. Excuse me, you know what I meant. So here, my speculation into who's buying these $20 call contracts. Could it be the market maker? Yes, that's correct. But they wouldn't buy exactly that many. They wouldn't buy them spaced 15 minutes apart. You see this hat? I'm hearing some dissent and some, it's a little bit of back and forth here in the comments versus GameStop versus AMC. You see this hat? If you've been around for 3 years, you understand why Keith Gill, Roaring Kitty, said, "When I move, you move." The Ludacris song. Because AMC and GameStop are both held within a basket of stocks. And they are heavily shorted stocks, equities, that have caused a variety of hedge funds around the world to go bankrupt, to become completely insolvent, and have made a lot of people a significant amount of money. So many times, just like we saw 2 weeks ago when they both ran up 350%, both AMC and GameStop. It was not one, it was not the other, but both. And then when they got crushed down, they got shorted down into the ground over the last 2 weeks and lost most of their gains. Not all of them, key word, not all of them, but they lost significant gains. Both the stocks are still up over 100% from where they were last month. GameStop was at $10 last month, now it's at 20 and change. AMC was at $2 last month, now it's at almost $5. Same thing in January and June of 2021. So this whole little bullshit about AMC's better, or GameStop's better, or hey, let's have a dick swinging competition, or I'm an elitist to this, or this company caused higher whatever. The fact of the matter is they're both a significant problem for the short hedge funds, the brokers, the market makers, the family offices. And to acknowledge only one or the other is ignorant. It's elitist. It's in my opinion, quite frankly, really fucking dumb. So I'll leave it at that. And there's a reason that even Keith Gill, Roaring Kitty, said, "When I move, you move," just like that. Apes together, strong. We don't fight each other. There's no reason for you guys to be fighting over AMC versus GameStop or Ryan Cohen versus Adam Aaron. The fact of the matter is both of them have done a great job for retail investors. None of them are perfect. Right? People want to talk shit about Adam Aaron's dilution of the stock. Well, Ryan Cohen's done the same. People want to talk shit about why doesn't Adam Aaron, issue a dividend? Aside from the fact that they're currently prohibited due to a couple of debt notes that prevent them from issuing them so far until those are paid off. GameStop did do a dividend. And because they didn't properly enunciate and explain to the DTC on how that would occur, the stock split dividend ended up being basically a complete mess because the DTC just did a stock split and not really gave any dividend. So the fact of the matter is here that neither one of these two guys is perfect, but they both have the best interests of retail and their respective companies in mind. Ryan Cohen is the number one shareholder in GameStop. Adam Aaron is the number one shareholder in AMC. Both of them could have bankrupted their company at any time and taken a small payout from hedge funds, but they haven't done that. They've fought, they've rebuilt the companies, they've paid down billions and billions of dollars in debts, they've raised billions of dollars in liquidity over the last couple of years. And it is in their best interest to make sure that these companies not only survive, but thrive. Ladies and gentlemen, I could go on here for another half an hour explaining the reality of the fact and showing you the charts, but go look at it for yourself. You don't need me for that. Go look at the charts. And every time one stock is up more than 25%, the other one follows. It doesn't matter if AMC goes first. It doesn't matter if GameStop goes first, but they always run together. Why? Because of something in the market called swaps. These swap derivatives are what Archegos used to game the markets. And we know and have speculated for years now that Archegos held a significant number of short swap positions against GameStop and AMC both. And when they exploded, that went over to Credit Suisse. Credit Suisse lost over $6 billion, and that exploded on them too. Now those swaps got rolled over to UBS. Now UBS has them as well. The Swiss Central Bank has increased their margin requirements between $12 to $17 billion in initial margin for UBS. And Swiss regulators have said that UBS has to be ready to be wound up at any moment if they become insolvent. This wouldn't be happening if they weren't aware of what is in their books. And the fact of the matter is that the Swiss government locked up Credit Suisse's trading records for 50 years. So in 49 years, we'll actually know what Credit Suisse held. But for now, we know that UBS is holding that bag. So it really doesn't make a difference who has the higher stock price. It doesn't make a difference which one has more cash, which one has greater potential, which one has higher or lower revenue, because both of them are very good companies, in my opinion. The fundamentals on both of these companies are improving greatly, vastly over the last several years. They've both paid down a ton of debt. They have both done a significant number of good things for retail investors, even if retail is not intelligent enough to see that. They're both extremely undervalued. They're both value stocks, growth stocks that have incredible potential, that, in my opinion, should each individually be worth several hundreds of percentages more than they are currently, simply based on their own individual fundamentals. But aside from that, they've been shorted to shit, and these shorts are fucked. And it's going to take a while. It's going to take a while. I knew this coming into AMC and GameStop, that these are some of the most heavily manipulated stocks on the market. And that's why in January of 2021, when the buy button was pulled, it was pulled on AMC, GameStop, SLV, the silver ETF. It was pulled on COS and a dozen other stocks as well. And what happened last week, 2 weeks ago, COS was also running with AMC and GameStop, but not to the same effect. You know, and a lot of these other stocks were as well. Anyways, I'm done. I have nothing left to say here. I could make this video longer, but you know what? I'm going to do another video after this. Maybe tomorrow I'm going to do another video on macroeconomics, and we're going to talk in part and in depth about how we are leading into greater hyperinflation in this country. Because if you think this is over, not even close. If you think that this bull run will last forever, not even fucking close. Not even close. And I will explain to you guys exactly how the M2 monetary supply has been abused through the reverse repurchase program by the Federal Reserve, through the Treasury General account from the U.S. Treasury, from the plunge protection team by Janet Yellen and her right-hand man, Gary Gensler, who are the 1 and 2 positions at the PPT. These shorts are going to have a serious problem very, very soon, especially if this actually comes to fruition, which in my opinion, it's got a great chance of doing so. It's got a high probability of being what comes next. Cheers, motherfuckers. We're going to be filthy fucking rich. And that's not financial advice. Do your own due diligence. Hire your own financial advisor, because I have not given you any personal or financial advice whatsoever. I am simply explaining the information for you to get your head out of your ass.